The king of Omaha, Warren Buffett. Come on. You don't make money when you buy. You don't make money when you sell. You make money when you wait. So, you want to start investing in the stock market and you really don't know how or where to begin. Maybe you're in your 20s, heck, maybe you're in your 30s or 40s, maybe even a little bit older. There's no better time to start than right now. Maybe you've even seen the market in the news as well and you're like, what does this even mean? Looking at all these numbers and metrics that these guys are talking about. Well, during the sessions is the best time to get into the market. And I've been giving advice to my friends and colleagues of how to get into the stock market. And they always have similar excuses, and I'm here to break down those excuses.
Just do it! Don't let your dreams...
In this video, I'm going to be discussing my 5 excuses that I've heard of why they don't want to invest in the stock market, or of why they might think it's a risky move to make. I can assure you, once you just know some basic fundamentals of the stock market, it really is much more demystifying than what you think it might actually be. Sure, Hollywood does like to jazz it up with Wolf of Wall Street videos or stuff like The Big Short.
Hold on. Say that again. CDO A has parts of CDO B, and CDO B has parts of CDO A, but then they both get put inside CDO C.
Yeah, that one's called CDO squared. CDO of a CDO. We call them synthetic CDOs.
What did you... Synthetic CDOs.
Synthetic CDOs.
That is f***ing crazy.
All these terminology that just fly way over your head.
An IPO is an initial public offering. It's the first time a stock is offered for sale to the general population. Now, as the firm taking the company public, we set the initial sales price, then sold those shares right back to our friends. Look, I know you're not following what I'm saying anyway, right?
This video is really just going to break it down of the bare bones of beginning to invest and how easy it can actually be. Maybe you don't know where to start, and that's okay. 4 years ago, I was in the exact same place you were. Before you even start investing in the stock market, it's very wise to kind of pay off all your current debts that you have. So when you're investing on a clean slate. I'll be compiling in the future my very own stock market and investing course where I will be detailing the exact metrics that you need. But here on this channel, I'm going to be giving away some free information too. So subscribe if you want to see some more. Your first step to taking any action on the stock market really is getting a broker. And it's not really like in the 60s or 70s where it's an actual physical person these days. Brokers are now apps. And we have phenomenal apps where you can trade markets. I know some viewers viewing this might not be in America where they have access to Robinhood, those kind of apps where they offer zero trading commission. I'm currently using Webull, eToro, and Thinkorswim. Once you do open a brokerage account, you don't need to start trading with real money. You can practice these techniques I will be teaching you in future videos on a paper account, which basically means it's a demo account where it's real life markets, watch what they're doing, watch companies that you value and that you are fond of, and just see what they do and just kind of build your familiarity with the stock market. Now that you've started your brokerage account and you've dabbled in a few paper trades here and there, I think it's time to start a watch list. And a watch list is basically just a list of companies that you like and maybe you would possibly want to see in yourself investing in the future. These companies on your watch list should be companies you know, companies that you've done research on and that you can see really good value in these companies in the future. Once you have these companies in your watch list, it's all a matter of patience and time for waiting for when these companies go on sale. At some point in time, you might have thought of investing in the stock market yourself, and there might have been an excuse that popped into your head. So comment down below of what that excuse might have been, and hopefully it's not a silly one. And that'll bring me to my next point or excuse that I've heard from my friends, which is what if the stock market crashes? And if you're a smart investor, stock market crashes and recessions are actually the best buying opportunities. Once you've done the legwork of finding great companies, undervalued companies that you see really good growth in the future, have them on your watch list, and then when there is a stock market recession like the one we were meant to be having right now, just a side note, the stock market at the moment is at all-time highs as of this recording. Even though there's a huge economic crisis worldwide, stock markets are they're breaking records right now. They can really play to your benefit. Number one, if you're young. Two, if you've done the research already into great companies. Compound interest is a beautiful thing. It's gorgeous, it's stunning. I mean, 20, 30 years from now, well, it's a long way. But I mean, if you look at a company like Amazon 10 years ago, stocks were trading at fractions of the price that they are now. Thing is that in time, stock markets always go up. So you might have bought here, or you might have bought here. Only difference is that one way, in one scenario, you make more money than the other scenario, but you did make a profit in the long run. That's the thing with investing, is that you have to have that long-term mindset of 10 years from now, I'm waiting in cash just for the next discount. And it's all about patience, guys. As Charlie Munger once said, one of the greatest investors, I think he was partnered and mentored Warren Buffett, the king of Omaha. Warren Buffett, come on. Charlie Munger actually said, you don't make money when you buy, you don't make money when you sell, you make money when you wait. Now that is profound. Yeah, so especially when you have time on your side, odds are in your favor, and the sooner you start, the better. Buying during a stock market crash is basically buying these great companies at a discount. It's the exact same concept of when your local grocery store has a sale. You try to stock up on those items that are on discount, and likewise you should be doing the same with these great companies that you're investing in. Personally, during a stock market crash, I'm buying more shares of companies that I own. Usually stock markets are very emotional and irrational. I need some water. Alright, so we're on take number 4 now. And let's jump to my third point, which is probably the most frequent excuse I've heard from my friends and colleagues, which is that they are not numbers people and they haven't studied finance or economics. Well, neither have I. It's really not that complicated. Just putting in a little bit of time every month, analyzing company fundamentals, looking at their balance sheets. I mean, this way of investing just a little bit more actively than what your bank is giving you. I mean, here in South Africa, banks have cut their interest rates for the 5th time. So savings accounts, they're probably giving you 2 to 3% per annum, which is, if you factor in inflation, you're basically just wasting your time with that money. But with a little bit of homework every week that you do, maybe take 15 minutes, half an hour out on your Sunday and just look at companies, analyze their balance sheets, just look at what their prospects are for the future. And personally in my stock portfolio, I'm up 40% in the last year just by doing a little extra, literally news article reading. 3 tools that I use just to analyze stocks and look at how they would be performing in the future, and I would be linking them in a future course. So if you want to maybe perhaps see what those tools are, definitely stay tuned for more content in the future. But senseless plug over. Investing in the stock market, wouldn't I lose money? I've watched Hollywood movies where people get bankrupt and oh no, like I've heard stories of 70% of people who join the market, they lose their money and they go into bad debt, and then oh no, it's just so scary. I just I don't know what I'm doing. Surely I'm going to lose money. I mean, what are margin calls? What is price to earnings ratio, book ratios? What does this all mean? This is a new world. It's all scary. Listen, I know it's scary, but it doesn't have to be. Anything is inherently risky. Going down to buy some groceries is risky. Heck, even skydiving, that's pretty risky. I'm going off track. Driving your car is risky, but you took your driver's test and you studied to make sure that you pass and you're a safe driver. It's the same concept with the stock market. If you do your research and look at these companies that you're investing in, look at what their quarterly profits were. If you just put in this little bit of extra time, in the long run, it's going to pay you huge dividends. No pun intended. The strategy of investing is called value investing, and it's the same strategy that's practiced by the greats. You can see value for something like this in the future. Maybe it's autonomous driving like Tesla is doing research into, or maybe it's ride sharing. You feel like Uber is the future. Companies like Google and Facebook are pioneering the tech industry, along with Apple and Netflix. There's just so many opportunities out there and companies that offer great return on investment. It's just a matter of finding them. And this brings me to my fifth and final excuse that I've heard, which is they don't have time. Guys, it's not another job. The whole point of investing is for it to be passive. Well, that brings us to the end of the video. I hope you found some value in this video, guys. If you did, and maybe the stock market bug has bitten you and you're trying to scratch that itch for future investing, definitely hit that like button down below. This one right there. I'm watching you. Hit it, please. Yeah, I've been taking out some time on my Sundays just to make these videos for you. And so, thanks for watching. You've been tuned in to Markup Mix, a channel which I'll be posting more content of investing in the stock market, personal finance, building your brand and entrepreneurship. We will be getting some special guests from South Africa in the business space on future podcasts. If you're ever looking for new content of how to invest in the global markets as a South African like myself, or even wherever you are around the world, definitely stay tuned to this channel. Okay, this should be what, take 5 by now? Don't even know. Stop being weird and Karen. Alright, okay. This is fun, guys.